Welcome. This is the weekly wrap up. We're going to cover the news from this week. We're going to cover a little bit on real estate, mortgage, the stock market, U.S. news, world news, and then the summary. Real estate had medium home sales prices come down a little bit to $392,000. The existing home sales are down 5.9% year over year, and the pending home sales are down 4.6% year over year. If you watch most news, they will act like the housing market is absolutely crashing. By these numbers, it's really not. This year is supposed to be the fifth best year in history in real estate, so it's not that bad. There's still a housing shortage, and that's probably a reason why housing is still doing okay. The housing shortage map is right here, and you can see around the country. The dark red areas have severe housing shortage. Then you have the lighter red areas are a little bit less severe. Then you have the pinkish orange area. And that's a lot of cities in Texas are in that pinkish orange area. So we still have a large shortage in housing still. Let's jump into mortgage. We've seen mortgage rates come down a lot this week. It looks like they peaked a little bit over 7.5% about a month ago. They've been coming down since. The average mortgage rate around 6.19% to end this week. Mortgage applications were down another 4% this week. We do expect those to tick up as rates come down. 30-year fixed rate was about 6.25%. A 15-year fixed at 5.625. FHA 5.99. The VA 5.99, and a 10-6 ARM came down to about 5.625. The best product, in my opinion, right now is to stack these two products. The 10-6 ARM gives you a 10-year fixed period up front to end this week out. We got that at a 5.625, and then you can put on top of that a 3-2-1 buy down, and I have videos on that. If you search my YouTube channel, you will see that there's a video on the 3-2-1 buy down that explains that in detail. So you can put these on top of each other. Your starting rate with that product would be a 2.625 in year one. You heard that right, a 2.6. Second year, 3.625. Third year, 4.625. And the fourth year, until the 10th year, you would be back to that 5.625. The strategy of this would be you would refinance once rates went down to the 3s or 4s again, and they probably will in the next 10 years. I'm expecting them to come back down to the 4s in the next 3 years. Stock markets ended up pretty good this week. It was a little bit volatile around Powell's speech on Wednesday. The Dow closed out at 34,428 points, up about 81 points. Powell's speech Wednesday caused some volatility in the markets. They rallied right after he spoke, and then they gave up some of that rally on Thursday and Friday. They ended up about 34 points today. S&P 500 closed out the week up 45 points. Big rally on Wednesday after Powell spoke and the Treasury yields declined. The NASDAQ closed the week up 203 points. That was this week's best performer. It was a big tech rally as the dollar declined. U.S. news. Jobs. The unemployment rate remains near record lows at 3.9%. Jobs open, 10.3 million jobs open. Fantastic. Retail sales year over year is down 9.7%. That's good for the inflation numbers. We want those to come down a little bit. Black Friday did have record sales, but it was only a 2.3% increase in sales dollars. And since we are hovering around 8% inflation this year, you could still say that units sold actually declined, which is a good thing. We want units to decline, and we want sales to decline a little bit to bring down inflation. Energy, very important topic. This is a main driver of inflation over the last year. Oil inventory, week over week inventory is down 12.5 million barrels. So oil prices could rise. OPEC will be meeting on Sunday to discuss further cuts. Personal consumption expenditures, that's PCE. It's up 4.3% year over year, down from 7.3%. So that's really good. People are spending a little less, and that's good for inflation numbers to come down. Powell spoke. That was this week's big news. Powell had a speech at the Brookings Institute, and he is still hawkish, saying they still have a few more rate hikes to do, and they're going to leave them higher for longer. But what the markets heard is at the end of his speech, he said we will be slowing the pace of rate hikes, which the market took as very good news. We know the next steps are for them to slow the pace of rate hikes and then pause the pace of rate hikes and eventually start cutting rates. That probably won't happen until the end of this year. World news. Zero COVID policy in China is still going strong, but there are a couple of cities or provinces that have started easing COVID restrictions. So we did see some China stocks start to rally. The Ukraine news. Russia continues the invasion and shows no signs of slowing. Energy concerns are rising throughout Europe. OPEC. The OPEC cuts, they've currently cut 2.2 million barrels per day, and they're going to leave that cut until the end of 2023. But they are meeting Sunday to discuss further cuts because we have seen the price of oil decline. This week it went under $80, bottomed at about $77 a barrel, and has since ticked back up. But they're going to discuss further cuts so they can keep that oil price high. So you want to pay attention to that. India, this was good news. India is, slowing down their tightening, and they said they're even going to start some government spending to sustain strong economic growth. So that's good news. UK has a little bad news. There's a large UK worker strike. Britain faces a widespread industrial unrest as workers struggling with double-digit inflation resort to strike action to demand better pay and working conditions. The summary, in real estate, it's a strong buyer's market. It means there's a lot of opportunity and it's time to get a deal. In mortgage rates have peaked and are headed down. The reason why you don't want to wait is once those rates get back to about 5% or 4%, the market's going to get flooded again. There's a lot of cash sitting on the sideline waiting. Don't be one of those people that waits. You'll lose the opportunity to get a great deal. Stocks. The stock market rally is continuing. The hawkish Fed speech didn't slow us down too much, and China was easing some lockdowns. That definitely helped. The news, there's still global recession fears, mainly in Europe. They're having some issues on the energy concerns, and they have much higher inflation than we do. But the worst might already be behind us, so stay tuned. Optimism. This is the best slide. There are many things to be optimistic about. Health. COVID has been declining. It's still around, but it's a lot less severe than it was over the last couple of years. Wealth. It's education time. Anytime there's a bear market, invest in yourself, invest in your education, and that will ensure you obtain more wealth. And then work. The employment is fantastic right now. This is some of the best working conditions we've had in the United States. So overall, it's not that bad. I think the media is painting a very negative picture when overall this one isn't going to be as bad of a bear market as many were thinking. Here's my contact information. If you need anything, give me a call, shoot me an email, or there's my website where you can apply for a home loan. Thank you very much. We'll see you next week.